your current policy may provide coverage where a builder's risk policy may not be, required. So it's really important that we look at what you're currently insured at. Now, granted, the larger projects, obviously anything that's new construction, if you're building out square footage, if you're tearing down walls, yes, it would be recommended that we're looking at a builder's risk policy. Of course, that, depending on the renovation size, part of your current property policy could still respond, but maybe, whatever's new, whatever's part of that project can be insured elsewhere. And then, of course, there's some clubs, a lot of clubs, especially coastal clubs, that have a different fire policy, a different wind policy, and a different flood policy. So each of those policies could respond differently depending on what the project is and what you need to be insured at. So tailoring that into your contract. So we see a lot of contracts that come in already signed. And a lot of times when that happens, we have to, kind of dial it back, say, well, did you look at these insurance requirements? It's not necessarily about budget. Of course it's about budget, but it's also about what's the market availability for this coverage. If you're on a barrier island and your contract says you need to insure the full project for flood, is that even available right now, or is it even affordable? So all this stuff just goes back to communication before you sign that contract, making sure the indemnification language is correct, making sure the insurance requirements make sense, looking at waiver of subrogations. There's a lot of factors before making that final decision and signing that contract.
And to round those 2 points home, I think the real answer is you should always be talking to your insurance agent because there's always something you might not foresee that, as Tracy pointed out or as Mike mentioned, that we can help you plan for. So if you don't have a relationship like that you feel you can talk to them 6 months before the project, it's really important that you establish that.
So Rob, for you, what gives you your greatest amount of heartburn, or why didn't they ask us in this case? And again, what would your best advice be to these folks?
Yeah, I have to be very cautious about that answer, right, due to the individuals in the room. But no, we're surrounded by such amazing, intelligent, diligent individuals. We're very fortunate to work in a business like that. I would say some of the heartburn might come from, and if there's board members in here, I apologize. We work with some boards that they join those boards because they have the knowledge, because they have the experience. But our market specifically changes so much, and the business is so different than it was 10 or 20, 30 years ago. And so having the trust from the board members, and we don't deal with it often, but when we do, it's a struggle, right? Because it's like, hey, things are different these days. All your experience is so beneficial to the operations of the club, but trust us that we're gonna lead you down the path of what we're facing on a day-to-day in our current environment.
And is there one area that you have the most discussion on with a different perspective than what you're actually experiencing?
Yeah, I would say valuations is a big struggle right now. Even 2 to 3 years ago, it started to become very difficult. We're still facing that. Maybe some costs have gone down. Steel is still up, lumber is still up, all of those things. But the cost of construction, I mean, we had a client finish a build, 4 or 5 months ago, and top of the line fitness center, right? Everybody always says it, but it was like a $30 million fitness center, and it was built for around 900 a square foot. Whereas a lot of clubs today are still maybe around that 300, 400, 500 a square foot. I know somebody said earlier, get away from square foot insurance. We kind of have to think about that for replacement cost. That's a big topic of conversation. So educating on that. It's not just about throwing around that word inflation, but what is it going to cost to actually build if we have a total loss here? And so that's hard to rationalize when we throw out those numbers. And the rates are going up. Yeah, we've still seen that. We're moving in a positive direction. But if we throw out there that, hey, your valuations due to get in a quote with a carrier also have to go up 30%, so we're looking at a 70% increase after factoring in rate, that is so hard to digest. So.
Interesting.
And that point really is excellent, because some policies have limitations in your coverage if you are underinsured. But even if you've gotten an agreed amount policy that doesn't have that, you've only insured for $16 million and it costs $24 million to actually rebuild. You still were sublimited by $8 million in that situation.
Yeah. So Nick, one of the things we talked about at Mediterra was how you all, from your risk management side of things, can help the club, architect, and GC in that value engineer thing that we talked about. And I think one of the examples you used, which I'd like you to pick up on, was what's required by code and what's desired by a risk management perspective. And one of those was sprinklers in the turf maintenance building, for example.
So with risk management, I like to think of it as two kind of strategies. There's both the actual risk management itself of improving your day-to-day aspects of your club, and then there's also the insurability of your risk management. So we have a club that built a fitness center just a few years ago, and the code in their county did not require sprinklers, so they didn't put them in. But most insurance carriers want to have sprinklers, especially in a fitness building that has a ton of electrical equipment, in order to offer insurance. And so in that case, we have to find inferior coverage for that club because they don't have that protection that they could have added during the project.
And are you able to help, figure out the ROI on that? If you put it in, it may cost you this, but you'll save it in insurance coverage. Are you able to help work with these folks? And
without a doubt, yes. Now you can't get it to a specific that 10 years from now your cost of insurance would be X versus Y, but you can look at it in the short term and figure out that if we're saving 10% annually over the course of the lifetime, it probably pays for itself.
Yeah.
I would add that we do have, because we rate so many clubs, obviously we're club specialists. We do have the ability to benchmark what the clubs are paying with the different carriers, and we know which carriers are offering the lowest rates. So if a carrier that's very specific about fire sprinklers have to be in that maintenance building or have to be in the building, we know what their general rate's going to be versus going to, say, a surplus or non-admitted market where they're twice or three times the rate. So it's a serious consideration on price.
And so we have a club that's fairly unique. They have a large amount of condominiums, close to 100 million. And so their coverage is currently with Citizens. And so Mike was able to put together a spreadsheet that showed the exact cost difference this year for buildings that had superior roofs versus older roofs, to where the club was able to truly have a financial calculation of, hey, to this association, if you pay $40,000 to replace this roof, you're going to save $50,000 over the next 5 years.
Got it.
I'll throw in one thing there, and you made me think of it, Mike, when you said benchmarking, but there's a process of wind modeling, and I'm not going to go into the weeds of that, but real-time example, a client was going to build a large portion of buildings, and we actually wind modeled it if they were going to use lumber against steel and what the rates were going to look like, what the carriers would view that at. And it was a great tool to sit with the client and show them that and say what the difference is. And to Nick's point, what it costs to build with lumber, what it costs to build with steel, but how is that going to look to the carriers, not only from a builder's risk standpoint, but from a permanent coverage standpoint.
And Rob's point ties in perfectly to the timing of talking to your insurance professionals, because that could be an example a year plus out from construction.
Oh yeah,
but by working
they haven't
with
even started.
you
That was a year ago. Yeah.
before they've signed contracts, before they've actually proposed to the membership what the budget is, they were able to provide data as to why they should propose this type of project.
All helps to better educate the consumer out there. Tracy, I've got a question from the audience for you. What's the best practice for managing budget as it relates to builders' risk deductibles? It can be a huge number. How should it be considered in the whole process?
For me and discussions with our board, it's really your risk tolerance, right? So from club to club, I have seen where some are more risk tolerant and want a higher deductible because of financial situations, reserves, and then some are like, nope, we don't want to assess, so we want to buy the deductible down as low as possible. We have the discussion. So during your process, we are going to build whatever it may be, fitness center, new clubhouse, renovation. What do you think it will look like budget-wise in 18 months? We can't guarantee what it'll be if there's an E-in, but we're usually pretty good. Again, both of our firms do so many clubs that we can benchmark an idea of what you need to budget. So depending on the risk tolerance of the club, then we can discuss the different tools to either purchase the deductible down with a buyback or just go to different carriers for those reasons. The one thing I want to say about this is, because I know we always talk about the property, right, which is super important, of course, but nowadays your general liability, the majority of the general liability have some sort of construction exclusion or minimal piece to it. So it'll be construction with a give back for maintenance, or construction is okay under your $1 million GL, but your umbrella carrier might have a limitation on construction. So that is a piece that sometimes, depending when we build our programs with clubs, we make sure and have those discussions. Are you looking at any capital improvements in the next year, 2 years, anything that would be considered more than maintenance? Because they're potentially, depending on size of the project, GC you hire, who's supposed to insure what, that might be something that we also might need to discuss an owner's interest policy on the GL outside of your liability for the club. So I think, and a lot of times I always get calls, we need a quote for builder's risk. Okay, but let's also talk about the structure of the liability. We definitely don't want the building to burn down or blow away, but we also don't want a general liability issue, a claim of some sort when it comes to the contractor versus the owner. So those to me are key points on top of deductible structures for property.
So on that, and Mike, I'll let you take this, in these builders' risk policies, what are the biggest exclusions that you run across that, advice to this group we should really be laser focused on?
Well, so it really depends, obviously, on the policy. There's a lot of markets that write builder's risk, and each will have their kind of own limitations or exclusions. One thing that I know a lot of the builder's risk policies don't cover fully are, your landscaping. So you might have, say a $3 million builder's risk project, and 50% or 500,000 of that might be just tree and landscaping. But your builder's risk policy may have a sublimit or may exclude it completely. So stuff like that, we see that exclusion quite a bit, especially in Florida where we get wind and the wind blows trees over and landscaping around. So that's one thing to consider. Other exclusions, the one thing that we always talk about is hard costs, the construction costs. So your soft costs are something that are not typically covered under your project value. So what's a soft cost? That's the cost of additional insurance if a claim occurs, the cost of additional architectural fees, permitting. So we want to make sure that we separate that out onto a separate, policy endorsement or sublimit, so it is covered, because typically it's not covered under the hard cost.
And related to that is something we discussed last week, is viewing your builder's risk with how it pairs to your existing property coverage. We have some insurance companies that will not insure the existing structure during a renovation. So a few seasons ago, we had a club expanding their clubhouse, and their existing carrier would not insure the part that was not being renovated during the construction. And so fortunately, we had enough timing to be able to replace the coverage to a carrier that would insure the structure that was not under renovation and then purchase builder's risk for the part that was. If you don't look at that in the forefront, you could get into a difficult situation. Mike and I had a very large claim happen about 18 months ago where they were renovating the second floor, and there was a leak in the roof that trickled down all the way to the first floor. And so it really came into that event where there was 2 carriers on it. Fortunately, it was Zurich, who Mike mentioned, and they have a sister company that does builder's risk. So it was all basically under the same umbrella, so it was a simple process to run through. But it was really important to have coverage that paired together versus separately.
So just in general, Rob, how regularly should we be talking to you guys? And, not just these projects, but, how frequently do you typically come to a club and make sure you're staying abreast of what's happening?
All of our clients have my personal cell phone. Text me on weekends. No, I'm just kidding. I think Nick said it early on, insurance, Tracy did. Insurance is never the first thought, and we understand you don't want to talk to us until you really have to. We get that. That's why we knock the door down, right? So constant conversation, constant communication, just to keep us in the loop, because it's not your job. Regardless of a board what might say to you about it is your job to know everything. It's not. You hire really good individuals to help guide the way for you. So just constant communication. I know these events are great, so we're able to shake hands and say hello, but making sure that we're always talking to you so we're aware of what's going on. We're marking our calendars when to follow up with you about certain things and stay in front of you. I know it's a high-level answer, but if you have something that is going on way down the road, year, 2, 3 years, just let us know. Just let us know so we can have it in the back pocket.
So, Nick, where do you usually see the biggest misses there in keeping you well informed? Is it, we learn and you're putting a shovel in the ground on the new project and now we learn about it, or is it something else?
That really is the big one. We had a situation where the club had already signed their contract prior to telling us about the project. And so then we really had to go as far as meet with the contractor. Mike spoke with them directly to explain why the contractual language the club agreed to was not available in the insurance market. And the contractor agreed to revise the terms from that. But that's a big one, is giving us the timing to look at your contract and inform you of what's going to be there.
Yeah, I would add that, and this is something that I think we'd all agree on, is a lot of times we hear we have a certificate of insurance that says we're additional insured, but if it's not on the contract, you're not. Because per the policy language, you're only additional insured by written contract. So I can't tell you how many calls or I've received from different clubs and other types of clients that have said, oh, we're fine, we're additional insured. Well, if we don't have it in writing and we don't have a signature on that, that's not the case. So just be careful, that kind of stuff. And we've seen really great contracts put in place talking about, oh, we're going to do this, we're going to do this, but no indemnification language. So if that language isn't on there, at the time of a loss, the club could be in trouble.
And then this goes outside the capital improvement realm, but another one that's fun for us is when a club tells us that they've been doing a new amenity service for the membership for 6 months. And many general liability policies exclude certain professional services like spa, massage. And so we'll see that there's a brand new massage facility and we were never told about it. And the applications that we put in place 12 months prior for the renewal said, no, there aren't spa services. And so it's really important that if you're going to change something, reach out. I've got a few GMs in the room that I probably talk to weekly, if not more often. And that's by far the best way to do it.
You're talking to some of these
Golf
people
doesn't
more
count.
than weekly? Wow.
Yeah, I mean, at a certain point, they become friendships because we're able to give real-time advice and not have it feel like, oh, if I tell this to Mike or Nick or Tracy, they're going to report it to the insurance company. It's no, let us tell you what you need to know up front so the insurance company doesn't have to know.
Could I add something real quick on that? So just real quickly, the other thing we always talk about is what's the cost of the project? What's the premium cost? But the other question is, what is it going to cost after the project's complete? So what Nick was going at with, the spa, you're putting in a brand new spa, you're going to be hiring X amount of professionals to do massages. What is a professional liability cost after the fact? Or one that's been a really hot button lately is we have a few clubs that are looking at going into the residential business, looking at building employee dormitories. Well, yeah, what's the cost of doing that, but also what's the cost going forward? How does it affect the liability policy going forward? What kind of recommendations would you have as far as ingress, egress, fire alarm, fire exits, that kind of stuff? So that's all very important before, once again, you sign the contract to understand the grand scheme of the budget.
So Tracy, again, I may not know this terminology, but there's a question that came in. How many clubs are buying owner-controlled insurance programs for projects? Is that self-insuring? Is that terminology that?
I'm thinking, are you meaning you buy it versus the builder? Is that?
OSIPs.
I don't know who
versus
sent it to me, but.
Well, I mean, but they don't.
Yeah,
okay.
I know who sent it to me now.
Yes, that's, no, sorry, that's okay. I thought that's what it meant. I'd say all of my clubs that we have worked on are buying it, not the builder. And our recommendation for that is you control it. So you can decide your deductible, although you can negotiate that with the GC if you needed to. We actually recommend that the owner purchases it because then you have control. We would be able to assist with what exclusions we like, don't like. You can have the building value here, the deductible here, but it's the meat of the policy. And what I always say, what's on page 1 and what's on page 48 that takes it away is just unfortunately what we sell. We need to be able to read that, understand it, and make sure that that product that is being purchased for you is going to be there and respond correctly or the way that you anticipate. That can be negotiated obviously with your GC. If sometimes there could be a situation, they might have more buying power than you. So I don't always want to say it's 100%, but I'd say 95% of the time our insureds are purchasing, our clubs are purchasing the builder's risk.
And I just wanted to add to that. So Tracy hit the nail on the head with the builder's risk aspect of putting that policy in the club's name versus the contractor's name. But I believe the question was specific to like an OSIP or a CSIP type project. Those are popular with condominium associations because of the difficulty to insure them. You're going high sky-rise buildings, so many different contractors and subcontractors there. So that's a type of product where there's one policy that all the different vendors are looped into, which is separate. And I personally have not seen a club do that style of insurance. It hasn't really been necessitated versus the club buys their builder's risk and all the contractors have their own insurance.
Good. So Rob, logic to me says it's roofs, but what's the one thing that would help us mitigate some of our insurance costs through the roof in these projects that we're looking at right now. And it could be some of them.
Was through the roof, pun intended?
Didn't realize I was saying that. Yes, thank you.
Number one, don't have any losses because you can control that. Roofs is a huge portion of it. Impact windows, I would say, is a close first as well. But it ties into what Nick was saying earlier, or you actually posed the question. It's not so much about the county code as much as it is about what the insurance is actually going to. It's not mandatory, but what are they going to want to see out of your construction build that will allow them to actually offer you terms? And I believe I brought this up in the last session, Kurt, but EFIS is a big one. It looks so good as a facade on the outside of the building.
But explain what that is to everybody.
Yeah, it's like it's a plaster kind of thing that goes on the outside of the building that just looks look good, contemporary and all that. But that'll just be torn right off in a wind event. You might not have any other damage to your building, so not have a claim of some sort, but this EFIS will get torn right off the building, and that's going to be excluded with a lot of carriers over a certain percentage. Now, if it's 10% or something like that, I think that's okay, but it's over 15, 20%, and you're just going to see it scattered all across your property. You're not going to be able to recoup from that. So it goes to the point of talking to us early and often to just tell us about the type of construction, the timeline, and all that stuff so we can budget for that and also add some insights on what to kind of stay away from.
And the one thing I wanted to add to that real quick, we spoke about it last week, is we always are concerned in Florida, South Florida, or actually Florida in general, of wind. The carriers now are just as concerned with fire. So, and the clubs, and God bless you, they're all wonderful. They're getting bigger and bigger and bigger as far as your buildings and your total insured values. So now they're saying, most carriers are saying, well, okay, if your clubhouse is here and you're building a fitness center, how far away are they? And if I've got 20 million here and another 15 million here, and the fire could actually somewhat connect, we're out. We're not happy with that. So those are the type of things we always are concerned with: wind, roofs, and sprinklers, and impact glass, and all that. But I think you definitely now keep that in mind when you are starting a capital improvement. Obviously, you don't only have a certain amount of land. You can't place it too far away. But keep that in mind to have that discussion with your broker, because that is something the carriers are literally now measuring. Is there a street in between? Is there an area in between that the fire cannot jump before they're willing to say, we'll take that additional exposure?
Rob, your follow-up?
Yeah, follow up on that. You talk about a proactive basis before actually building. I would say we take it a little bit step further in a proactive basis of hurricane preparedness, safety and restoration services that are teed up so that when something does happen, you know exactly the plan moving forward. That's not only good for you as a club, but it's really good from an insurance perspective for us to know that that's in place, paint that picture, because that's really what our job is. We're painting a picture to carriers on why they should take on your exposure. So having those in place, and there's a lot of things going around now with like flood walls that you can have installed in front of doors, and a lot of cool things that are occurring. So the trend of being proactive across the board, I think, is super important.
Well, and to go back to your original question, Kurt, like flood walls is the perfect example. We've seen clubs do like a $7 million project, and it's all interior renovations, new carpets, new fixtures, fresh paint job, and none of the money is allocated towards improving the risk. So there's only so many variables to consider: the impact glass, the roof, having additional straps to prevent it from flying off. But when you're looking into doing a capital improvement project, consider allocating part of the budget to improving the building, not just improving what the members see when they experience it.
So Mike, I think a lot of what we're talking about, and thematically, is we got to establish relationships with our GCs, with our architects, with our insurance folks, and having some confidence because of the relationship that we've developed. I'm curious on that. Where do you come in, and do you want to be at the weekly owners rep meetings? You know, how frequent and in what form does that look?
Well, you know, I would say as much as you'd want us to be there. I mean, we don't have to be involved in every single step, of course. You know, a lot of times we're really, once again, involved in the initial contract process as far as the insurance requirements. And then, you know, if there's questions that arise that come out of these meetings, we'd be happy to assist. And like I said, we will participate. Nick and I participate in all types of meetings, all types of board meetings to go over this type of stuff. So it really just depends on where you feel you need us. and whether whatever that question or opportunity is, we will try to meet it. So it just depends, really, and how comfortable you are with your general contractor is very important. I think everybody saw the presentations earlier this morning, and really what they stress is making sure you pick a good team. Obviously a contractor that's validated, that has experience with clubs is very, very important for obvious reasons.
So Nick, as we're looking at this market in general, and I'm thinking personally as I ask this question, I live about 2 miles up the road, just west of alternate A1A, the road out front. So in January, I got my notice that my homeowner's insurance carrier was getting out of the market. And then my renewal, I came from northern Michigan where my homeowner's insurance was about $650 a year. Yeah, I remember those days.
It's probably more than that a month down here.
It's just a little more than that now, because it doubled with the only person who would write my insurance this time out. What's happening in this market now, and what's the biggest difference? Where do I have to be? Coastal, inland? What are all the things that we should be looking at and anticipating? This may be a touch beyond capital projects, but just in general, since we got you here. It's
a difficult question to answer directly because there's so many variables to it. On a very high level, the market is stabilizing, where we're not experiencing on the commercial side of things. Residential is still very difficult. Yeah. On commercial, we're not seeing the same 20, 30, 40% increases or non-renewals of the past few years. But that's not to be said that it's directly improving to get back to pricing of 4 or 5 years ago. We've seen a lot of renewals that are flat or slightly lower, but what it really depends on is the club itself, the same as your home. If it was built last year, if it was built 50 years ago, it makes a huge difference. So for any club, you really have to think about your club itself. Where are you located coastally versus inland? Were you constructed recently, or are you a 40, 50-year-old club? And the bigger tie is what's your membership and club's risk management approach. We have some on Miami Beach that choose to not buy insurance, and they're very comfortable. Their membership is aware. We have other clubs, like Tracy mentioned earlier, that they want to have no risk of assessment whatsoever and buy their deductible down to the lowest available in the market. And so it really ties into the specific club. So Tracy, picking up on that, what's the happening out there with self-insurance, and what are clubs looking at, and how are they dealing with any aspect of that right now? I know it's a risk-reward piece of the puzzle, but
yes.
What are you seeing?
Well, a lot of the clubs last year and the year before had to take substantially high named storm deductibles just to actually stay in the ballgame as far as keeping your budget relatively normal. And I say normal, and it was still bad, I know. This year, we have seen that start to turn, whereas potentially, I have a club that I'm working on now, they're willing to pay the same amount, but if we pay the same amount, can you take our named storm deductible from 10 to 5? We actually are getting that done. And that's also down to Miami on the water. So and it's changed from January to March to May. It's evolving in a positive way. I think Florida is seen as one big, hey, hurricane, here I am. So whereas we used to be able to say anything east of 95 is coastal and west of 95 is okay, that doesn't matter. Middle of the state, east, west, it's still an issue. The reinsurance treaties and capacity did increase this year at renewal. What we've been hearing, though, unfortunately, is the terms of the reinsurance contracts still have not changed substantially. So if they weren't allowed to write on a barrier island, they're still not allowed to write on a barrier island. So although they might be willing and have more capacity, if they had things that they weren't allowed to offer or a lot of to write, that hasn't changed. But we've always said in our business, competition is what moves the needle. And so we're starting to see competition. We're starting to see some carriers come back in and want to play on a certain layer. And with that, that's helpful. That's what gets, I don't want to lose the business, because carriers still don't want to lose the business if it's a good risk. So we are seeing that change, and we're seeing that from January to literally to May. It's almost bi-weekly that we're seeing the market move in a positive way. So everyone keep their fingers crossed the wind doesn't blow this summer, because it's going the way you want it to go.
Rob, follow up on that?
Yeah, funny story to kind of paint that picture to make it all really make sense. We had a call with one of our wholesale partners, right? I think everyone knows sometimes we can go direct, sometimes we have to go to a wholesaler to go to the E&S market. And we're like, okay, so we're starting to see that positive movement. Give us some direction on what you're going to see, what we should anticipate in the next couple months. It's like, think about this, Rob. He's like, you walk up to a dark alleyway. You're not just going to start running down the dark alley, right? You're going to take a step, kind of look around a dumpster, and take it really slow to make sure you're not getting in danger. And to her point, it's like they're looking for competition. If carrier A is starting to kind of dabble in something, that's what's going to get us back into the soft market. Carrier B jumping in as well until, knock on wood, a loss happens, everybody jumps back. But further on that point, it's not just about what's happening in Florida. We say this example a lot. Insurance carriers are like country clubs in the sense of it's a pool of members or insureds. And if something happens to the carrier or club, we hate this word, assessment, that's what happens. And so the carriers that write in Florida also write outside of Florida, just not vice versa. And so if we see, snowstorms in Texas or fires in Arizona, that's also gonna be problematic for us in the future of what we're going to anticipate. It's not just about storms. Getting out of storms and not having storms is obviously step one, but just a side note.
So Mike, we've obviously been talking a lot about building stuff, clubhouses. I'm curious if you look beyond, because a lot of clubs are doing capital projects on golf courses, for example. What do we, and I don't know that I ever called you guys when I was doing one of the 3 golf course renovations out there. Frankly, now I'm thinking, what didn't I know that I should have asked back then? But on that kind of a project, what should we be talking about, and when is it the same things?
So that's a great question, and I'll tell you this, it's probably, if I could be honest, one of the most challenging insurance products to place is for golf course renovation projects. As most of you probably know, if you know your insurance program, just getting T to green coverage in general is difficult on a property policy these days. Now it has improved, as we mentioned before, the market is stabilizing a little bit. We're seeing a few markets that are starting to come in and start working on these projects again. 5 or 6 years ago, we were able to place these golf course renovation projects with Zurich or US Assure with no problem, but now they've kind of caught on to it. And what we've been able to do is there are a few key markets that can offer the coverage. There are limitations, so they might provide you, plenty of coverage for if an aircraft comes and crashes down into the course. But if it's a wind-related event or an event where you have a number of trees, you're paying a per tree debris removal type loss. So there's going to be limitations no matter what. I think one of the most important things is if the builder's risk is difficult to get, maybe talking to the contractor to see what kind of installation floaters that they may be able to obtain through their insurance agent. So the installation floater would really just protect the contractor's interest as far as their the machinery and the actual materials on site. A lot of times the contractors have a little bit easier time getting those policies in place versus having to put a full builder's risk on the entire golf course project. Another thing to consider, and this is something that I don't want to call it a trade secret, but if you are, say, doing your golf course renovation and there is a portion of that golf course renovation that includes a structure, so if you're putting in a new restroom, if you're putting in any kind of building whatsoever as part of that renovation, a lot of times what we can try to do is put some of the golf course renovation tied into that structure. So once again, as I mentioned earlier, when you're talking landscaping, there's limitations. So we just got to make sure that we have to be very aware of what we can and cannot purchase in the market right now.
And so can I just say something real quick? Rob had mentioned that. I had a client or a club on the West Coast that had been doing a golf course renovation project when Irma hit and literally had just done the seeding. And no power. They watered from their lakes, and there was a break in the water main on the main road that actually went down and started to head to the lake. So the EPA showed up with their hats on and said, halt, you're not allowed to touch anything in the lakes. You're not allowed to water. I mean, it was hysteria, something you don't think about. And right at the time where it couldn't be any hotter, it's not raining, and they have no access to water. So in my thought through that whole thing, we learned and figured out, like, that's when maybe a restoration plan, if you can't buy the insurance, so you can't buy a builder's risk for flood or for wind specifically on a golf course, if you get told that by your broker, then maybe just make sure that there is a plan in place. Okay, so maybe they were looking to obtain water trucks to come in and water. So like plan B, it isn't always going to be an insurance product necessarily. It could be that, our teams assist with risk ideas, risk management ideas, restoration contractors that can help. Maybe GCs can say, listen, I think this is what we would be able to do if that were to happen. And there would be a way to water. So I think it's a broader subject. When we talk insurance, we always talk about the whole risk itself. What are the potentials? What have we seen happen? And then kind of think through the process. You never want it to happen to you, but when it does, it's better to have a plan than be reactive.
It's a really good example, Tracy, and because what we don't think about, that what is covered, what isn't covered, and what is our option there, especially in this crisis-prone area at times. So,
And
Nick,
I think both of those points really highlight the value of the communication. Because if a club was going to do a driving range renovation, also wanted to build a golf learning center, instead of doing those 2 consecutive summers, do it in 1 year and you could have it fully insured. Versus if you did the course renovation separately, you wouldn't be able to place the coverage. And then for Tracy's example, you could consider the timeline of when you're doing the project. We have a club now that started their renovation during season, much to the chagrin of the membership, but all of the real construction work will be done before July. So there's less risk of damage while they're doing construction or delays from weather.
right?
And so if you were going to do a project that only takes 6 months, maybe try to start it in January and end it in July, and potentially you don't need to buy the wind insurance on that project.
You just got to think about the consequence with membership.
Well, yeah, exactly. It's easy for us to make points
you don't have
that
to
help the
face them.
insurance, but then we don't have to deal with telling the membership what decision was made.
Right. Unless we got 36 holes and we can manage that a little bit
Well,
better.
yeah, it's like, can we get a new pool bar? Can we get a new roof? I know what the members are going to vote for.
Yeah, exactly. So, Rob, I've got a question for you to start out with, and then see if anybody else has any follow-up on H2Bs and what risk we've got there. But then we're just about at our time. So giving you a preview, I'm then going to ask each of you to tell us the one thing, a bit of advice for anybody undertaking a capital project that you would say, don't miss this. So that's going to be the last question I ask each of you. But Rob, we had a question from the audience that, many clubs and many in this room that I'm aware of have H2Bs right now. They're either talking about or have purchased housing, or they're renting. Many clubs in this area have rented apartment complexes or thinking about buying them, but you've got transportation issues, you've got all kinds of things. What are the key points that we should be thinking about? And again, how do we involve all of you at what stage? Because we're thinking, I need bodies. The last thing I'm going to think about is, what's the insurance impact on that?
Yeah. I think Mike tentatively touched on that, and that's probably, I don't want to say it's the biggest trend right now because it's been a trend for quite some time, but a lot of clubs are starting to invest in that heavily today. But Mike touched on it. They'll start to build housing for them, but not really think about the liability side of it. And the biggest thing I was going to say, you took it out of my mouth, was the transportation. We see that as a big issue once in a while because they don't let us know up front. So we're always proactive in asking that question. How are they getting to and from work? Are they using their own cars? Are you transporting them in a van that you have? Things like that, I would say, is the part of that's probably overlooked the most.
Well, and then also if an employee is living in club-provided housing, effectively they're an employee 24/7 at that point. So any type of injury that occurs at 11 o'clock on a Saturday night could still be deemed a workers' comp claim because you're at your place of employment.
I just want to add something.
Interesting.
Right?
Like, I'm thinking about some of the clubs in the room, and most have rental properties or have rented hotel space and so on. But yeah, and I'm sorry, Mike.
No, I apologize. I was going to say, going back to transportation, we are seeing some of the liability carriers starting to ask the question, well, is the club transporting their employees or H2Bs to the housing? And a lot of our clubs are, mainly from what I'm hearing, is because the cost of transportation for these third-party companies have gone through the roof. Now, as an insurance, best practice, we always recommend that you use a third-party transportation company, because then you have an extra layer of protection, because the club's not responsible for driving. But in the case where you are using your own club vehicles, regardless if you hire a driver or a third-party driver, the vehicle's yours. It's titled in the club's name, so you guys are going to get sued. And what we tell all of our clubs is have procedures in place. It's very important to be on top of the motor vehicle records. Don't just rely on the agents or the insurance company to tell you whether a driver is good or not. What you should be doing pre-hire is pulling those motor vehicle records, keeping record of that, just so that we avoid any kind of situation where there's any chance an attorney can say there's some sort of negligent entrustment of the club by providing that. The other thing I want to mention is, obvious stuff, no cell phones, hands-free driving. Just have a set of procedures in place so that when hopefully it doesn't, but when an accident occurs and the attorneys are coming after the club, you say, well, listen, these are our procedures that, this particular person did follow, what it may be, but you have those procedures in place. So it's very important.
I would echo just one thing on what he had to say, the MVRs. A huge takeaway from that response, do it proactively, because we actually just had this happen. I'm not going to name the club, but they hired somebody and we endorsed them to the driver schedule, ran the MVRs, and it came back that they're an excluded driver. And the client didn't do this on the front end, and we didn't have that conversation. So that's a problem, because that person has to get to and from certain locations. And so doing that proactively actually can help you guys out a lot.
And I think to add to that a little bit, because it definitely transporting employees in large groups, right? So if you have a transit van and you're going to have 6 to 8 people, it's not just the liability carrier, which does have an issue. It's also your work comp carrier. If there is an accident, there's going to be multiple injuries. Obviously, they would be under workers' comp. So our recommendation to our clubs that do it is we have assist with policies and procedures, but then also take it a step further. If it is something that you're going to do and you are going to do in-house, meaning your own vehicle, titled in your own name, then I think ask for assistance for training. As Mike said, you want yourself to be as defensible as possible. That's all you can ask. Everyone in here does a great job, but to make you as defensible as possible for your insurance carrier. So if you have policies and procedures, if you have written information, if you can prove that they go to annual or semi-annual training, whoever the drivers are, all of that will be here. This is what we do. This is when their trainings were. This is when this happened. And heaven forbid the accident still happened. I just think those are all great tools to think about if you're going that avenue to think about. So.
And you're making me think, why would I want to be in this business? At this stage, I'm kidding. But so my last question, Mike, I start with you and go down the road. We're talking about capital projects, best practices, how the insurance piece of that whole puzzle dovetails onto making this a successful outcome. What's the one bit of advice, because you've learned from a negative experience or you had a best practice? I want to hear from each of you and your takeaway to these folks.
And I don't want to sound like I'm repeating myself, but it's all about that contract. It's all about understanding what you're currently insured for on your current policies. But that's very, very important when determining whether, how to structure the insurance portion of that program. We just want to make sure that anywhere we can buy the coverage to prevent a non-paid claim is what we want. And we want to have that communication. Maybe we have a sublimit on flood, or maybe we have a sublimit on wind because we can't fit it in the budget. But all that stuff has to be done before that contract is really finalized. Otherwise, we're backtracking. So that would be my definite takeaway, or my key takeaway here is that communication and that contract.
And when you say contract, you're referring to which one of the multiple contracts that?
So I'm talking about the standard AIA contract where typically where the insurance requirements are listed. I mean, some clubs just send us the entire thing. Some just send us the insurance portion. I typically like to see all of it, but if just the insurance portion is fine. So we just need to make sure the verbiage is there. Obviously, you have an attorney to review these contracts as well, but believe it or not, not all attorneys are insurance agents, and a lot of times they're not aware what's available in the market. They're not aware, what the carriers are denying claims on. So we just need to be very lot of communication, and we have that open dialogue.
Thank you. Nick?
Yeah, so I'll tackle it from more the club perspective than the insurance perspective and leave coverage-related stuff for Rob and Tracy so we don't steal all the topics. But for the club side of it, I think membership communication and awareness is so key, both with getting feedback on what type of projects they're looking for and then communicating what you're doing and what's insured of it. So often insurance, it's a hypothetical. The goal is that we don't use any of the coverage we placed. But then when there is a claim event, something goes wrong, all of us, as well as the decision makers that bought the insurance, have to answer for what was purchased. And so if you proactively tell your membership, we've chosen to self-insure this project for X, Y, and Z reasons, you're protecting yourself in the long run if something does happen.
Great, thank you. Tracy?
I guess for me, I would say just, again, I think we've beat this to death, but is definitely communication. There's so many pieces of the insurance that will go along with the project or any part on the liability side, the auto side, the work comp side, the property side, the wind side, the flood side. All of that needs to be discussed and thought through. It is not your job to think about all that. Honestly, that's our job. So when you're starting the process and when you're looking at a capital improvement, a renovation, a new building, an add-on, just reach out and speak to your broker. I mean, is there going to be a structural change? If it is, then we might need to look at your current property policy in addition to the builder's risk, because that's where we would need to pair those two together. And then really just kind of, I think we touched on it a little bit, but a little tidbit to take away if you are doing a capital improvement would be soft costs. I know it was discussed a lot this morning with both of the panels before us, and that's like the hidden piece that everyone always thinks about. It is the extra that you have to endorse on. It is going to be a premium charge, but that is going to be when you do, heaven forbid, have the claim. Blows away, roof collapses, whatever it may be, that's where you're going to get, now I have to extend a builder's risk another year for another $200,000, or I have to pay interest or no permit fees or whatever it may be. Where was that money if you didn't have the soft cost built in there? So then you're going to be like, okay, on top of this and the deductible, oops, we didn't have a number in for soft cost, and therefore we're short on all this now that a claim occurred on the builder's risk project. So we didn't mention that in detail last time, but it's kind of something to think about because it is always the extra charge on when you do send a premium, then you'll show the soft cost or X amount. I think that sometimes gets everyone nervous, but it's a value, and just make sure you're having those discussions of what your concerns are.
You're making me nervous, but yeah.
How am I supposed to say anything different than all that? No, so we've thrown so much at you today, not just us, right? But insurance, GCs, architects, and you are, as the quarterbacks of your club, expected to know all this and keep it in mind and be the proactive person. But aside from everything they just said, I'm trying to think of something different. I would say from operations, don't be afraid to have us come and sit with the board or even speak to some of the members that ask a lot of questions. I understand it's always case by case. Some boards like to be involved. Some boards like the GMs to run the show or controllers, COOs. Having us come and sit down with the board and explain it so it's not all on your shoulders seems to alleviate a lot of stress for you personally as the quarterback of the club. So I would say don't be afraid to ask your broker to do that. We do it all the time. I know Nick and Mike do as well. And it seems to keep everybody apprised to things and ask less questions and just be more of a strategic partner to you. And that's what we really want to be. We want to be business partners. We don't want to be looked at as a commodity or just an insurance guy or gal that offers you a piece of paper, tells you you're protected, and ironically, you hope you never have to use it. That's not what we want to be known for. So strategic partnerships, communication, and being proactive. So thank you all.
Rob, Tracy, Nick, Mike, thank you so much for your insights on all this.
Thanks, Chris.